All right. How am I investing? Honestly, that's a question that I keep receiving, and the answer is really not that simple. You got to change the way that you invest constantly. It's not a single thing. So the way we're gonna talk about things today is not on a every day or every year or every month strategy. We're just gonna literally look at January 2026, and I'm gonna give you insights into how I'm thinking and how I'm behaving through my portfolio. So if that's something that interests you and you want to talk about stocks, crypto, go ahead, click that subscribe button so you can get more intro like this. So before I get into all that, let's drop that intro really quick. All right, if you're still with us, thank you. So what I'm going to do today is I'm going to go through a bunch of charts. I'm going to go through what's going on in the market this second, January 6th, as we speak. The market is still open. The market has not closed. There's different things going on in the news, like the capture of Maduro. Obviously, that happened this past weekend, and the market has not reacted crazy to it. Even the oil market has not acted crazy to it. So, if you were listening this past weekend when I talked about it, I told you when this happened in 1989 with Noriega, it was on a Wednesday, and the market did not react at that time either. The next day, the market was flat. So, it's not always something big happens that the market is shocked. So, this is a positive sign that the market did not crash or correct or use this as an excuse to sell off. So, what we're going to do now is, get into everything real quick. All right, so what we're going to look at is how the markets are reacting today. Right now, it is currently 2:43 p.m. and the market is still open as we talked about. So right now, the Dow, the S&P 500, and the Nasdaq are all up. The Dow is actually over 49,000 and may close over 49,000 for the first time ever. So that's big news. And one thing that I always look at is the volatility index, which is the VIX right here. And obviously, you can see that the VIX is not reacting crazily at all. It's actually down today, which is good. So that means that the market being up today is not on some crazy volatility. Like, this is healthy market behavior, and this is the kind of thing that we want to see. You see oil is down today. Gold is up, up almost 1%. That's like really big for gold. So that means all the precious metals are up today. If we go over here and take a look at crypto, down across the board. The biggest one is XRP, but if you look at it from a longer standpoint, XRP is actually up during the last week. So if we take a look at the last month, you can see right there, XRP is actually up on the month. So something to take a look at. One thing I like to look at is always the fear and volatility index. The fear and greed index. And as of right now, it's neutral. Yesterday it was around 48. Today it's still in the neutral area, but it's pushing towards that 53 side, almost at the greed area. So once it gets into that greed area, that's when you want to start selling off some of your assets, because that means that the market is going to drop off. So go ahead, take a look at that. We're at 53 on that gauge, especially when you're in extreme greed. The volatility index is usually up there in the 20s and 30s. So that's another time you want to look at to sell. During this neutral area, when we're in this neutral zone on the volatility index, one of the things that I'm doing is just trying to gauge which way is the market going to move next. Is it going to move up? Is it going to move down? And we do this through looking at different things, and this fear and greed index is one of them. So this is why I like to take a look at this. But one of the main things that I want to look at here is, as we go ahead and take a look down, is how is it reacting to the moving averages. As you can see, the S&P 500 for market momentum and its 125-day moving average, we're above this right here, which is a positive sign, and that's why the market is not reacting so crazy. Um, so take that with a grain of salt. This since January and the market came back for 2026. There has not been any crazy moves up or down. And honestly, I think right now the market is just trying to analyze and figure out what are we going to do next? Which way? What's the next news? Are we looking for a catalyst to buy more? Are we looking for a catalyst to sell more? So right now we're going to be in this slightly up, slightly down in a trading range that's kind of neutral. This is where traders flourish, like people who are day trading, because they want things to trade choppy and sideways where it's predictable. For a long time, AT&T has been one of those stocks that has been really predictable, where you can trade it because you know it's going to stay between $20 and $25. Right now, the market is behaving in that manner until we get some big news, either positively or negatively. The next thing we're going to look at is one of the stocks that I wanted to talk about today, which is Netflix. And we're going to look at some of the news that's associated with the stock performance and why I'm actually a buyer of this anywhere in the 95 price and underneath. And we're going to look at the chart and see where it's at. But Warner Brothers acquisition is one of the things that's an overhang on the stock. They won the bid, quote unquote, but as of right now, Paramount is actually trying to jump in and go above them and try to, give their board another package that's going to be bigger than what Netflix is offering. So as the board, and if you're a board member, you're not just going for who's giving you the most money. You're trying to figure out which of these companies is going to be the best going forward. So if Netflix were to buy them, how does that affect, Warner Brothers? Is Netflix going to do the best for Warner Brothers and all of the assets that they have, for example, like Batman and anything that has to do with DC Comics? If they start making movies or shows based on those, are they going to do what's in the best interest of that brand, or are they going to try to do what's in the best interest of the company? And, Netflix has a good reputation for doing big things with what they have, and even with their own stuff, they've done good things with it. Stranger Things, and other big shows that they've been able to do that organically. So now purchasing this as an investor, you're like, all right, even if they don't get this and they don't win, it's good that a company that you're investing in and putting money into is taking that money and actually trying to do something with it, which is what you want. You want more innovation. You want them to try to get bigger. You want them to try to do more with what they're giving them. So you, as an investor in Netflix, when you see something like this, take that as a positive, whether it works out in their favor or not. If it doesn't work out in their favor, the stock may go down even more, but don't take a short view on it. In 5 years from now, if the stock price of Netflix is $90, where is it going to be 5 years from now? Do you think it's going to be higher or lower? Remember, this is an innovative company. All right, so let's take a look at some other news. The valuation and sentiment, despite long-term gains, recent volatility, and slower subscriber growth, debates have led to question about whether the stock is overvalued, and some analysts downgrading targets due to the Warner Brothers deal overhang. And again, it's because it's going to trade sideways until there's some clarity on there, but that's not always a bad thing. Some of the positive things that they're doing, they're moving into live sports. So they have strong viewership for live events like the Jake Paul fight that they recently had. And they've also had things like the NFL. They've had live games. They had some on Christmas, and those did really well. All right. So one thing to look at going forward is upcoming earnings. Investors await the January 20th earning for them. So that's coming up in a few weeks, with expectations for revenue growth, but ongoing focus on subscriber metrics and profitability drivers. So let's go ahead and take a look at the stock. Let's look at it from a 1 year perspective. And the reason I put these lines here, I put a line that's signifying resistance and support. So at the resistance level, I had it marked at the $99 range, because even going back a year, you can tell that Netflix traded up and down in this range. So that's why I did that. And that's what I think is going to happen for the foreseeable future. January 20th is going to come, and, you know, a few ways it can go. January 20th comes, and we can see that they did really great with their earnings before interest, taxes and deductions, and amortization. So they might have had great results. They beat their top and bottom lines. They beat the analyst expectations. But because of this overhang, the stock can either sell off or keep going sideways. If it sells off and it goes anywhere under 90, I'm definitely buying more. I bought some today at 89.50. I bought 5 shares, and at before this market closes today, if it's under 90 still, I might purchase some more, because I really believe in the long-term view of this company. If you come here, we can see that it had an all-time high of 134. So they're basically down about 30% from their high. When the stock market crashes, what do you guys think it goes to? What do you guys think the stock market does? What do you think the stock market does when a stock goes down? Um, like when the entire S&P 500 goes down, where do you think you want to be a buyer of it? Do you want to be a buyer when it's 5% down? Do you want to buy more when it's 10% down? This is what separates the rookies from the people that have a little bit more expertise and have been through this a time or two. When something is down 30%, but you believe that there's a future in that stock, go buy more, buy more, buy more. All right. One thing you don't want to do is catch a falling knife. So, if this thing were to drop to 75, 60, 50 because of bad news, and the news is not getting better, then you got to ask yourself, all right, maybe I should hold and not buy anymore. But if right now, as we look at the chart, it's trading in that range, the same range that it traded at before. And what happened during that time? It hit this level of resistance and it surpassed it. And what happened? It kept going up. So that's one thing you want to look at, and you don't want to miss it. And that's one thing that I don't want to miss. So that is what I am looking at currently. Another thing I'm looking at, another stock, is Uber. So actually, I'm sorry, this one is Disney. Where the current price of the stock is closed at 114. It's in the stock is trading near its 52-week high of 124 and above its low of 80.19. Disney pays a semi-annual dividend of 75 cents per share. Some of the key news analysts, multiple analysts, including Bank of America Securities, have reiterated buy ratings and added Disney to their Q1 2026 tactical ideas list, citing an inflection point for profitability. One thing I saw a lot this week, and I don't know if you guys saw it as well, was a lot of videos where people are talking about they're going broke but still going to Disney, or they're going in debt in order to go to the Disney parks. So think about that. Like, these parks are overcrowded when you go anytime. And that's only one part of their business. They can afford to do bad in other areas of their business, such as like the cruise lines and things like that, because their parks are so popular and they're all over the world, and people are going, like, no matter where they are financially, like going there is like kind of an honor. Like, people want to take their families there at least once or maybe twice in their lifetime when they have kids, and people have kids. So those parks are going to continue to flourish. And for a long time, we're going to look at the chart. This stock has not really done well. And, a lot of it happened during COVID. And since then, the stock has not really gone above and beyond. Another catalyst to look at is CEO succession. The board is expected to announce Bob Iger's internal replacement as CEO in the coming months, as he is set to step down at the end of 2026. Now, this is going to be a bullish thing. Trust me on this. This is going to be a bullish thing for the company when Bob Iger steps down, not because he's bad. He had a long range when he was doing really good things, but a lot of people are kind of have fatigue from all of the DEI stuff. And I'm not saying it's bad or good, but a lot of the gay characters in movies, or a lot of like characters being portrayed by a different race that they weren't originally. A lot of people had that on both sides, liberals and Democrats, the liberals and the Republicans. So once he leaves, especially if they get somebody who's really known and has done really great things in other locations, this is going to be a bullish thing for the stock. So that's why I'm a buyer of this company. Anywhere under the $120 range. Let's look at the 1-year chart. I did some support and resistance going back a year, and I have it right now at 106 on the downside, and it's currently 114, and 118 is what I find to be the resistance. 106 is the support, and you can see it's been trading. It trades in that range. It did break through, but since then, nothing happens. But another thing I'm looking at going forward is the way they're doing this thing with the trailers, doing like teaser trailers before the actual trailers, where they're going to do, I believe it's 6 small teasers before Avatar, showing Doomsday. So far, they've shown Captain America, they've shown Thor, they've shown the X-Men, and I saw one earlier. It could be AI, but it was the Wakandans and the Fantastic Four in one trailer. So what they're doing there, I think, is going to be bullish. And if that movie meets the expectations, think about the merchandise, think about the collaborations going forward with TV shows, thinking about how that Doomsday can be a full force multiplier for that brand. All right. So that's one of the things I'm looking at and why I'm bullish on Disney right now going forward. So that's another thing to look at. Bitcoin, I wanted to talk about it briefly. It's not really doing much. It did come up off its lows, but as of right now, I haven't purchased any since it's gone up a little bit, because I don't know if it's going to sustain. I don't see anything in order for it to sustain that upwards momentum. So just one thing to look at. Let's look at the last 7 days. You can see it's gone up. And again, it came up, it hit a peak, and now it's coming down. And I think it might drop again. That's where I'm looking at it. And that's my sentiment for the entire crypto market. But some of the crypto relevant news, Bitcoin price swings. Bitcoin is testing key resistance levels around 9,400. It kind of failed there, with analysts divided on whether it's bullish breakout or temporary recovery. Again, I'm on the temporary recovery side. Altcoin momentum. Solana, Ripple, and XRP have shown significant gains, but we talked about XRP earlier. It's off of those gains. So just keep that in mind. And then you have the AI and meme coins. AI related tokens have reportedly outpaced meme coins in recent momentum, though meme coins on Solana, such as Dogecoin, are also seeing a rebound in trading volume, which is good. I like that. That's a positive, trading volume. Some institutional and big corporate news. Morgan Stanley enters the ETF market. The Wall Street giant has filed with the SEC to launch exchange traded funds tracking both Bitcoin and Solana, marking a significant step in traditional finance push into digital assets. MicroStrategy, Michael Saylor's company, continues to accumulate Bitcoin, recently purchasing an additional 1,287 BTC. A new Bitcoin linked saving coin targeting a 7% annual yield has also launched, tied to Strategy's holding. And then Walmart adopts crypto payments. So Walmart has integrated a service through its OnePay application, allowing millions of shoppers to use Bitcoin and Ethereum for everyday retail purchases. Some regulatory and policy updates to be aware of. South Korea crackdown. So the South Koreans have financial regulators are considering preventing freeze mechanism for accounts suspected of manipulating crypto. So that's not for everybody holding crypto in Korea. So this is going to get spinned. So keep that in mind. This is just for people that are suspected of manipulating the crypto market, and this is a good thing. The U.S. Senate is engaged in talks regarding a critical crypto market structure bill. That's a positive for the market. Ghana has moved to legalize and regulate cryptocurrencies, making it easier for local projects to operate. Bullish, 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 bullish. All of this news is bullish news for the crypto market. And that's why long term, I am invested. I am dollar cost averaging into a lot of these assets that I like. And I am bullish on the economy as a whole. Again, even if the market crashes, how are you going to react to that? Are you going to be scared? Are you going to sell off with the sell off? If you do that, just know that I'm probably going to be buying what you're selling. And that's where I'm at. But I want to know where you guys are at. What are you guys doing? How are you guys investing? What are you guys buying? What are you guys selling? How do you feel about what I said? Do you agree or do you disagree? Let me know in the comments below. As always, invest in me and press that like button. Invest in yourself and smash that subscribe button. It literally costs you nothing. Until next time.